Gun violence spiked in 2020 and shows no signs of abating, with homicide rates ticking up in some U.S. cities and a record-breaking number of Americans heading to gun stores. About 19,400 Americans died from gun violence in 2020, including accidental shootings, according to data compiled by the nonprofit Gun Violence Archive, a nearly 26% jump from 2019. The number of mass shootings, incidents with at least 4 injuries not including the shooter, also jumped from 417 in 2019 to 611 last year, from high-profile shootings to lesser-known ones. And the country's 3 largest cities, New York, Los Angeles and Chicago, logged over 30% more homicides than in 2019, though crimes like rape and robbery, with fewer stores open to rob, possibly became less common. But it gets worse. Some 336 mass shootings have been reported so far in 2021, a 20% increase over this point in 2020. And in the first 3 months of 2021, most large U.S. cities reported year-over-year increases in homicides, according to data from the Major Cities Chiefs Association. Some criminal justice experts have tied this rise in violence partly to COVID-19, which upended the economy, swelled unemployment rolls, caused social disconnection and may well have blunted police agencies' effectiveness. And as COVID-19 infections wane and Americans return to school and work, gun violence could continue surging as mass gatherings become more common. And it's happening in an America more heavily armed than ever. Rampant fears of political upheaval, stoked by a fraught election, intense social unrest, and fears by some of tougher gun laws, and economic uncertainty led to a record 22.8 million guns sold across the United States in 2020, up 64% from 2019, according to estimates from industry consulting groups Small Arms Analytics and Forecasting. Gun sales have cooled a bit this year, but still above pre-2020 levels. Even at a time when some felt intense economic uncertainty, others sought out more financial risk. Margin balances, borrowed funds used to buy stocks, skyrocketed from around a combined $480 billion among U.S. investors in March of 2020 to an all-time high of over $778 billion by December, according to the Financial Industry Regulatory Authority. Investors who borrow from stockbrokers to make trades take the risk a stock will move the way they predict. If they're right, of course, they pay off the loan and can make a profit. But if they're wrong, stockbrokers might require additional cash to cover the loss, creating a growing debt. And plenty of these risky traders seem likely to have been regular folks, trading from home. The spike in margin debt coincided with a historic surge in retail investing in 2020 when, according to JMP Securities, about 10 million individual brokerage accounts were created. Data from Bloomberg Intelligence shows individual investors accounted for 20% of all U.S. equity trading in 2020, about double what it had been a decade earlier.